Happy Friday, Eric Bible at the Bible team at Neil Home Loans. And yes, another Friday and another decline in mortgage rates. As we kick off this wonderful Friday, the 30-year fix is currently sitting at 6.48%, down from last week, 6.58. So yes, below that infamous 6.5 now. And it's finally starting to appear that the market is coming to terms that we want lower rates. And it looks like finally these rates are holding. On top of that, first week in the books for the new regulations imposed from the NAR settlement. And then the labor market. What's going on there? And the position that it's placed the Fed in and what we see the Fed doing in the next meeting. Those are the things that I want to cover today. And I first want to jump into the labor market. As I've been mentioning over the past few months, you've likely heard from other pundits in this space, is that the jobs numbers are not telling the whole picture, as what we're seeing on Main Street, hearing from small business owners, large business owners, that the labor market is not as strong as the Bureau of Labor and Statistics led us on to believe. Every year we receive this time of year the annual revision for non-farm payrolls. Well, on Wednesday that came out, and go figure, 818,000 jobs were removed from the last year's worth of Bureau of Labor and Statistics, the BLS jobs report, meaning about 1 in 3 of the jobs created from March of 2023 through March of 2024 were not actually created. So draws a lot of question of, a lot of those misses in jobs, actually almost every miss where jobs were stronger than we had anticipated or the market had forecasted, rates responded negatively. Looking back over the past year, every time jobs day came into play, we saw a miss where unemployment held, jobs stronger, rates got worse. Well, this report on Wednesday showed that, hey, those numbers were not entirely accurate. Now, market did not respond immediately, but what we're seeing is, despite other economic data released this week and what we'll see going forward, the market is now really clued in on what the Fed will do next. And honestly, it puts the Fed in an incredibly tough position. So here, as we've been discussing, and as I've been sharing for the past few months, past few weeks, the interest rate conundrum, whatever we want to call it, that we're in was brought on twofold: inflation and employment stability. And with the Fed releasing their minutes from their meeting earlier this week, the Fed is now, from what the minutes state, they're not as concerned with inflation kind of reigniting. Or yes, it's a talking point, but their focus is now shifted to employment. They believe that inflation will continue its deceleration, but the labor market has got the Fed kind of spooked. And seeing the revisions this week, it really kind of begs the question of what the Fed is going to do in September. Seeing that 1 out of 3 of the jobs created last year were not actually created, that would tell us that the unemployment rate is likely higher than that 4.3% number. And yes, the labor market is not as strong as we were led on to believe. So yes, the Fed has a tough spot that they're in as we approach September. Speaking of the Fed, they concluded their Jackson Hole Economic Symposium this week, and we will hear from Jerome Powell later this week. So yes, rates declined this week. We saw rates really in line with that infamous jobs report that came out earlier this month, best of the rates that we've seen in over a year. But despite that data that came out on Wednesday, we didn't see much additional movement. And it's all kind of posturing to what Jerome Powell is going to say this afternoon and really future casting into what the Fed will do in September. So as it sits right now, interest rates are at some of the best levels we've seen, as I mentioned before, in over a year. It does appear that long-term, short-term interest rates are headed lower. And yes, it does appear that the labor market is not as strong as we were led on to believe. So here it's going to be really queued up to focusing on the markets, on what the Fed is going to say, and ultimately what they're going to do to fix this. So all ears, all eyes on what Jerome Powell will say this afternoon. As always, we'll share that information as it comes out. Now, the big one, NAR. The new way of conducting business is here. We've survived the week, and with it, we've fielded a ton of questions. And again, as I've said before, change is not easy. Change is uncomfortable. We don't like change, and that's okay. But something that has stood out is business is still happening. Clients are still eager to understand how this impacts them, but are more confident and capable than ever and willing to pay for our services, your services, if we can demonstrate value. A couple questions that came up this week were around seller concessions and the impact to already defined interested party contributions. So in my newsletter this week, I included a cheat sheet. So Fannie Mae, Freddie Mac earlier this year came out and said, commissions, concessions, whatever we're calling it now, do not count towards your IPC, interested party contribution. So if the seller is participating in a co-op where they're providing the buyer a concession to cover your commissions, and it's clearly notated on the contract, that does not impact the interested party contribution. That's important when we start looking at lower down payment scenarios, investment properties, as there are specific caps on how much an interested party contribution could be, which drew into concern of if the buyer is receiving concession from the seller for commissions and they negotiate an additional concession on top of that for repairs or what have you, those dollars can't be utilized. So no, that is not the case. And again, I've included that cheat sheet in the link below. And as I mentioned before, change is not easy. It's uncomfortable, but the magic happens with growth in that discomfort. So as always, if you are running into challenges in how to communicate this information to your clients, how to demonstrate your value, scenarios, or any topic that we cover here on a week by week basis, know I'm here and would love the opportunity to connect and talk through it. As always, make it a fantastic Friday and an even greater weekend. Thank you.